Right now, the smartest thing most people can think of is to do nothing. Wait for the dust to settle. Wait for the bottom to be confirmed. Wait until the price goes back up before they feel comfortable buying. I'm doing the opposite. I'm buying now. Not because I'm brave. Not because I have information you don't. Because the math makes it very difficult to justify waiting. This video is exactly what I'm doing, exactly why, and the specific numbers behind it. Not feelings. Not hopium. Just math. Let me be honest about what this moment actually feels like. Bitcoin is down. The headlines are bad. Everyone who bought at the highs is sitting on a loss. The friends who got in at the top are quiet. The ones who never bought are suddenly the loudest people in the room. And the fear is not irrational. This is not a paper exercise. This is real money for many people watching months or years of work sitting in a red number on a screen. The volatility is the fee. But that doesn't make it hurt less. I'm not dismissing the fear. I'm saying that this specific feeling, peak apathy, maximum discouragement, is historically the worst time to sell and the best time to buy. Not because it feels good. Because of what the data shows every single time this feeling has appeared. There is a metric called the sell-side risk ratio. It measures how much financial pressure Bitcoin holders are applying to move coins. When it's high, there's a lot of buying and selling, emotional, reactive, volatile. When it collapses, it means almost nobody is applying force to the price anymore. Right now, that ratio has dropped to a level that has only appeared 3 times in Bitcoin's modern history. The tail end of the 2018 bear market. The late 2020 accumulation phase. The late 2023 bear market. In plain English, the people who were going to panic sell already did. Every single time this reading printed, what followed was one of the largest price moves in Bitcoin's history. I am not saying this is the bottom. Nobody knows the bottom until it's in the rearview mirror. What I am saying is that peak apathy, the moment when almost nobody cares anymore, is not the end. It is historically the setup. Now let me show you the other side of the equation, the supply side. 21 million Bitcoin. Hard cap. No exceptions. Of those, approximately 3.7 million are lost forever, forgotten passwords, abandoned hard drives, wallets from 2010 nobody can recover. Satoshi's wallet holds 1.1 million and hasn't moved in 16 years. Corporate treasuries hold another 1.5 million and climbing. Before anyone opens their phone to buy, approximately 6.3 million Bitcoin are permanently off the table. That leaves 14.7 million in circulation, divided across 8 billion people on this planet. There are over 120 million millionaires in the world. If every millionaire decided they wanted just 0.1 Bitcoin, there wouldn't be enough supply to give even half of them what they want. That's before you count the ETFs, the sovereign reserves, or the ARMA Act, the bill moving through Congress right now to acquire 1 million Bitcoin for the U.S. Treasury. You are not competing with another retail investor who panics like you do. You are competing with algorithms owned by sovereign wealth funds that have time horizons measured in decades. They don't sell when they get scared. They buy when you do. Here is the actual math I am running. At current prices, $200 a month accumulates approximately 0.024 Bitcoin per year. Before the 2028 halving, which cuts new supply in half again, written into the code, not speculation, that compounds to roughly 0.096 Bitcoin over 4 years. Nearly 0.1. Not from a windfall. Not from leverage. Not from timing the perfect bottom. From a habit smaller than most people's weekly restaurant spending. After the 2028 halving, more than 93% of all Bitcoin that will ever exist will already be in circulation. The era of easy accumulation closes a little more every 4 years. I am not waiting for a number that feels comfortable. I am accumulating through the discomfort. This is not prediction. This is arithmetic. To be specific about what I'm doing, dollar cost averaging on a fixed weekly schedule, regardless of price. No leverage. No derivatives. Self-custody and cold storage, not sitting on an exchange. And this matters only with money I don't need for at least 4 years. If you do not have an emergency fund covering 3 to 6 months of expenses, that comes before any of this. A bear market will always create a moment where you need that money. Being forced to sell at the bottom is the single worst outcome, worse than not buying at all. Defense first. But if the foundation is in place, the math currently argues that buying consistently through a bear market beats waiting for a price that feels safe. By the time it feels safe, the supply will have compressed further and the halving will be closer. Let's be realistic for a second. What could make all of this wrong? A catastrophic software vulnerability. Quantum computing breaking the cryptography faster than the protocol can adapt. A coordinated global regulatory ban, not one country, but a genuine G20 consensus to prohibit it entirely. These are low-probability events. Not zero, but low. The risk I take most seriously is the one nobody mentions, myself. Psychology has wiped out more portfolios than any bear market. If I cannot watch a 50% drawdown without panic selling, I do not deserve the upside. That is the filter the market applies to everyone equally, without exception. Two people are finishing this video right now. The first will decide to wait. Wait for a lower price. Wait for confirmation. Wait until it feels safe. And by the time it feels safe, the math will be harder, the supply tighter, the halving closer, the window smaller. The second will open a calculator right now. Not to buy $1 million. Just to find what number fits their budget, build a schedule, and start. Not because it feels good. Because the math does not wait for feelings to catch up. I've already made my choice. The math is why. If this helped you see the numbers more clearly, hit like and subscribe. In the next video, the one on-chain signal that has predicted every major Bitcoin bottom in history, and exactly where it's reading right now. See you there.